Alright, so coming back at you with another video. Today we're going to talk about Kraft Heinz. I'm not using my new microphone. It's glitched up or something, so I'm back to the standard default microphone. Anyways, you might come across a stock where maybe you're up a lot on it, but the company's not doing so well. The dividend maybe has dropped. Kraft Heinz, I'm up $147 now after market. But if we look here, the dividend payout ratio is not too good, not good at all. Some other analysts I've come across have said that the dividend yield is not high enough or it's not sustainable. And before we get into that, just want to put a shout out to my sponsor, W Energy Powder. It's an energy formula that gives you energy for gaming or working out. It's sugar-free. They have some different formulas, so there'll be a 10% off discount code below the description in the links if you want to check them out. So I have two other food stocks that are relatively the same price as Kraft, Campbell Soup and Conagra Brands, CAG. As you can see, dividend yield is the same on those as Kraft, but the payout ratios are healthy. Dividend growth is pretty good, whereas dividend growth on Kraft is not so good. Now, what would I replace it with? I was talking about getting back into Crestwood CEQP. Early on, I had this stock when I first started investing. I think I bought it for like $10 a share, and I sold it for $14 a share for some profit. I don't know why I didn't keep it. It's $30 now. Dividend yield is a lot more than Kraft. The only thing that's a little bit bad is dividend payout ratio. I'm thinking the minus is worse than no minus. But if you go down here and look, for the next year coming up, it's improved a lot. This is another company that's probably coming back from the shutdown. Now, Motley Fool also says bad things about Kraft. They're saying that the dividend isn't sustainable. But if you go over to CEQP on Motley Fool, they say good things about it. They say it has solid earnings, good cash flow. So it's a solid company. That's another energy company that deals with natural gas, crude oil, other things. Now, if you compare that to Energy Transfer, ET, I've had this for 2 years. Now, their dividend growth has gone down because they slashed the dividend back during the shutdown, but it's going back up steadily. Whereas CEQP has kept the same dividend throughout, and that's maybe why the dividend payout ratio's messed up. It's cheaper than Kraft, and it does pay a 62-cent dividend quarterly on each share. Kraft has gone steadily up here in the last day. So I'm just going to give it till Thursday or maybe Friday, see if it goes up anymore. And then I'm probably going to sell that out and put it towards CEQP. And probably also buy 4 shares of OHI with a profit. OHI had a good quarterly review on their profits. So that's been going steadily back up. Some of my real estate stocks have gone down a little bit. ERC is still down. Campbell Soup has gone up above what it was prior to them selling off a portion of their company, and the stock dipped down for a while there, but they're looking good. CAG is looking up, but everything else is looking pretty decent. So anyone listening, just give me your thoughts, maybe something I missed, whether or not to sell, get rid of Kraft. I'm pretty confident that they're a solid company, but some of the wishy-washy dividend up and down doesn't sound too good. Now, will CEQP reduce their dividend? Could happen. But recently, a number of my stocks have increased their dividend. So with everything in stocks, it's calculated risk. So anyway, thanks for listening. As always, keep investing, and we'll catch you next time. Yeah, I got nothing.